You're watching Stockwatch. I'm Zinati Goma, and joining me to unpack your stock-related questions today are Pierre Verster from Protea Capital Management and Roy Mutooni from Sanlam Investments. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or an X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gentlemen. Let us get straight into it. One of the big news that we saw in the morning came from ARK Invest, African Rainbow Capital, saying that it has now cemented its intention to delist from the JSE. I think they had actually flagged this about 2 years ago or a year ago, can't really remember, but finally they've put it down on paper. Roy, what do you think of that? And also the reaction from the market? I think at some point it climbed by 5%, but not really too much.
Yeah, look, the thing about these things, these are holding companies where the assets are held, the share price reflects a deep discount between the value of the assets and the share price. And the thing about it is as well, highly liquid, very concentrated shareholding, and people always had a problem with the amount of fees that they charged for managing these assets. So I guess the guys who run it had just got to a point where they realized we're not going to realize what we thought we were going to be for. The market isn't giving us appropriate value, so maybe let's take it out. Now, there's going to be a bit of a complication here because of the difference between the takeout price and what the perceived underlying value is, and also what they said the value was in their numbers. So it's going to be, I don't think the story has ended yet. I think there's going to be quite a bit of narrative and chatter around this before it's concluded. But I think this is ultimately what happens to a lot of holding companies. They start with a lot of fanfare. There's that discount. Management struggle to justify what they're paying themselves. Eventually, they want to take it out, and the market assesses a value at that point in time.
Yeah, and that climb in the share price is almost 7%. I guess I'm just used to the share price surging by double digits. That's why I said it wasn't a lot. JP, I saw quite a few comments on Twitter saying that they don't like this. Some people that are shareholders, particularly with the timing. Things are really ramping up with the growth of Time Bank, for example, Rain. But also some people seem to be having a problem with the price. I think they said that they would take out the other shareholders. Was it 9 Rand 70, 9 Rand 75? Yeah, could there be anything that you're concerned with there?
Well, these offers are supposedly they should be fair. Now, what fair means, it's quite a technical term when it comes to JSE and prices, and the company has now contracted BDO to say that it's fair. It's probably fair because it was made to all shareholders, but there's another word that will come in, and that word is reasonable. And we wait to see the full report from BDO to see if it's going to be reasonable. Now, reasonable has also got two definitions. The one version of reasonable refers to the share price, and if you make any offer above what the share price has been traded at, then it's deemed as reasonable. But I can also say that reasonable means it should reflect what the assets and the liabilities of the company fairly valued, their fair market value. And this offer is admittedly at a discount. I think it's about a 12% discount to the net asset value of the company. So that is where the unhappiness is coming from. People are saying, why did they not offer the full net asset value? Why are they offering a discount to the net asset value? Now, interestingly enough, ARK Investments is a Mauritian company.
Yes.
So the Mauritian Companies Act is applicable to the company. In the South African Companies Act, we've got certain checks and balances, and it's called Section 164. It's a section of the Companies Act, which means that if you're not happy with the price in a forced sale, you can take it to court.
Oh.
But there isn't this in Mauritius to the same extent. So what this means is they could make a discounted offer because the law in Mauritius allows them to. They probably have enough friends and family on the shareholder register that they feel quite confident that it will pass. And then they will probably delist, and we won't see the upside of Time Global. They'll probably say, well, if the market gave them a better reflection of fair value, if the share price traded higher, closer to net asset value, then they wouldn't need to delist the company. So it has been an interesting few years to see what has happened with this company. There's also been some tax changes between South Africa and Mauritius.
Yeah.
It makes it difficult for them to unbundle and sell some of their holdings. So yeah, it's an interesting story, and I agree with Roy. Maybe there's another 1 or 2 chapters, but we're getting very close to the ending of the story.
Yeah, and it is quite interesting that they're now saying that they're changing their country of domicile from Mauritius to South Africa. Well, talking about offers floating around on the JSE, there's a question on Barloworld. What is the standby offer made to Barloworld shareholders? Can you still tender shares for 120 Rand? I do believe that the offer made by the consortium, I think it was 123 shareholders voted there, and it seemed that majority voted against it, and now there's some sort of standby offer. Roy, just walk me through the mechanics here.
So initially what basically happened was there was an offer by the consortium at 120 for the whole company. It was put to vote and shareholders rejected it.
Yeah.
As a fail-safe, they had a parallel offer that in case the full offer was not accepted by shareholders, they offered to stand good for that 120 Rand for a period of time. Now, it's not clear whether it means that, well, they've given a schedule and everything, and they want it all done by September. And basically what it means is that if you want to sell your shares at 120, you tender it to them. You don't necessarily deliver them and you don't get payment, but you tender it to them. When the offer closes, they'll tally up all the tendered shares. And if they reach a certain threshold, then what they'll do is they'll pay everyone out. And if they can delist, they will delist. If they can't, then they remain a listed company with whatever majority holding they have, and everybody else who didn't tender their shares remains there. So effectively what you do is you end up with a company that now has a significant majority shareholder, significantly less liquidity, and everyone who tendered their shares gets their money and get to walk away effectively. So there's a whole timetable, and I think the viewer should look up the precise detail there, but this is the nuts and bolts of what is being offered in that timetable.
Well, JP, it seems that there are complications. How do you feel about it? Because there've also been concerns about a conflict of interest with the CEO being part of this consortium.
Yes, and that noise is still going around, and the PIC voted against the compulsory scheme because of those issues. But if you read between the lines, they released a statement a week or two ago, and there they effectively said the price maybe is fair. So if you read between the lines, they might accept the price, notwithstanding the concerns about conflicts of interest. The difference between the two is the first one, like I said, which was voted down, was compulsory, meaning if you voted against it, they could force you to still take part. You needed to let go of your shares. That failed. Now it's a voluntary offer. So if you don't want to let go of your shares, you can hold on to your shares. But as Roy has cautioned, if the PIC votes for the 120 voluntary offer, and a lot of other investors do as well, you'll be sort of stuck as a minority shareholder in quite a liquid share. And there's another big minority shareholder, Silchester, a UK investment manager, who will either be stuck with you, or they might decide to throw in the towel and also tender at 120. And then if they get more than, I think it's 95% of people
90.
accepting 120, is it 90? Then they can again squeeze out the rest and change it into a compulsory scheme effectively.
All right. Very, very interesting developments there. Well, gents, let's get to Renergen. Renergen closed at, when was this? Yesterday. 8 Rand 65. Let me see where it is today. Renergen. And I have to do this because we don't have graphs that are showing on screen and we have been getting shouted at. And I have voiced it out with the powers that be. So hopefully we will get those graphs back soon. 8 Rand 70 today. Yeah, is the price reasonable or is it market hype that created the current price? Of course, we did see that surge in the share price. Was it earlier on? This was late last week, actually, after they said that they started selling their liquid helium. Roy, yeah, price reasonable or is it market hype that's buoyed this price?
The share price came down from, what is it, mid-40s to 4 rands, give or take. And that was associated with the probability of them getting helium out and various market commentators who didn't believe it was going to happen because things either kept going wrong or were being delayed. Now they've announced that they've shipped it. They've made a plan and they're able to ship helium. So there's a whole reset in market expectations, and that's why it doubled from that 4 rands. Is it a reasonable price? Well, it all depends on how much more capital they need, how much more capital they'll come back to shareholders for, how much more in terms of helium they're able to produce and sell on, and whether this new process they're using is actually sustainable. So there's a long way to go. It's a long way to go. I think from the country's perspective, it's fantastic that something's happening here and something exciting like this is actually happening on our soils. But from the perspective of a shareholder, just remember these things require a lot of capital. That capital comes over a long period of time. The risk of being diluted is significant. The risk of things going wrong, as we've seen in the last few years, is incredibly high. So yeah, I guess proceed with caution, but well done on the company for at least moving on with this first shipment.
All right. I did say that I'd get your thoughts on Renergen, JP, but scrap that. Somebody's asking you. Your view on interactive brokers?
You make me laugh, Senati. Interactive brokers, yes. So it's a very interesting business. It's a stockbroker. It used to be a market maker, and then they became an institutional stockbroker, and then became a retail stockbroker. And today they offer a very good service for individuals and smaller funds who want to buy shares all around the world. They're one of the leading global online stockbrokers. They also offer you margin. You can borrow against your shares. You can short shares. It's a very sophisticated platform. It's been growing very strongly. They have big competition. Last week, my stock pick was Robinhood, which is one of the competitors, even though Robinhood focuses only on the consumer market, not this institutional market, not smaller funds. And it's very much app-based rather than just internet web-based, like Interactive Brokers is to a large extent. So I like the business, but it's very difficult if effectively the price of your service is continuing to see pressure. And your competitors are giving away the service for free and making money in other ways. So Interactive Brokers are trying to compete. They're also making money from flow, as it's called in the US, where you can make money not from actually trading, but giving liquidity to the market as a whole. You get paid for that. So it's a decent business model. I like the business, but I like Robinhood even more.
All right, all right. Well, let's get on to some more questions, and particularly related to the numbers that came out on the JSE today. Bytes Technology, is it a good medium-term buy or hold? The share price is moving up and down over time, which gives good entry points. The annual dividends are fair. What do you say, Roy?
Well, you remember this was one of those companies that was unbundled. I think it was from the Altron Group.
Yes.
And I think it's our closest association with the whole AI phenomenon. So what they do is that they're a reseller for Microsoft. And remember, Microsoft just issued that 360 Copilot. That's a subscription-based thing that has a bit of AI there. They changed the way they incentivize these guys who sell their product. And these guys just seem to have run with it. I mean, the share price was well up today because they showed significant growth in gross profits. They're well ahead of where the market was expecting. And it just seems to me that this is the this is the coal face of where subscribers get in touch with AI, how AI gets distributed through, packages such as the Microsoft Copilot. So solid business, always done really well, very dependent on how well these big packages, these big software companies do, because their work is reselling and distributing. So yeah, solid business, hasn't put a foot wrong. There was an issue around the CEO, but from an operating perspective, really hasn't put a foot wrong in a long time.
Yeah, and it's quite interesting because I was also thinking that, but then the share price has been very, very volatile, and it was quite on a downward trend from May last year. But of course, now we have the shooting up of the share price today, more than 15%, breaking a few records, exceeding targets. JP, do you think that when there's an opportunity, this, investors should be taking a dip there?
Yes, I believe this is an opportunity. I think 2 years ago, the share price was too expensive. People did not really necessarily know the business quite well after it was unbundled out of Altron. And then the concern was, well, if you're only sitting between big clients and Microsoft, what if Microsoft decides to go to the client directly? But Microsoft is not in the business of employing a bunch of IT technicians running around, going to businesses or government institutions, as what happens in the UK with some of the clients of Bytes, and implementing and updating software and doing all of that. That is the job of the distributor. And Microsoft has got these distributors in countries all around the world that are third parties that they decide to use rather than going directly to clients. And it works for them. So Microsoft probably is not going to go into the business of competing with these distributors. Yes, they change the incentives every now and then, and this is where Bytes has been very good since the last change, which happened late last year, December 2024, to adjust their business model and still make the margin in the middle as a distributor. So good cash flows, decent growth. I think at this price, it's in buying territory, while 2 years ago it was in shorting territory.
All right. Well, as we were talking about investment holding companies, there's a question of on Remgro. Will Remgro do the same as PSG because of 48% discount to share value and unbundle? They did come out with, was it a trading statement today? And it seems that there was an improvement in their numbers, particularly looking at some of the headwinds that they experienced in the previous period. But just on, a potential unbundling, do you think that that's on the cards, Roy?
Remgro have taken a slightly different tack. Basically, what they decided to do was to have a few big holdings, few significant holdings, which they would co-own with significant principals and keep them unlisted. So Mediclinic with a co-investor there, the alcohol business with a co-investor as well. They're trying to get the fiber business to have, Vodacom as the co-investor and a couple of others. They do have some listed stuff in Outsurance, FirstRand, and there's another one I can't recall, but this is going to be their core business. This is what they've decided to do. There'll be a big institutional investor with 3 or 4 really big holdings, where they are the financial investor and the operating entity, the operating manager, so to speak, is like a global expert. So very different line from what PSG did and where PSG ended up unbundling all of these operations. I guess that's their strategy for now. Time has to pass to see how successful they are at that, but they're giving it a good run as it stands right now.
Yeah. Well, PSG did delist, right? And Remgro obviously is still listed and it has unlisted investments. Do you think that they would actually go the route of delisting, JP?
Well, in the case of PSG, they unbundled the majority of the investments and then took the rump, the part that was not listed with some Curro shares, and they took that private.
Yeah.
In the case of Remgro, I don't know. It seems like the Rupert family is quite happy with the status quo in how they are managing Remgro. They've got super voting shares. So it's impossible for shareholders to put pressure on them to unbundle or to do something. Again, you know, it would be strange. Let's say they want to unbundle the biggest asset, Mediclinic. That means to list Mediclinic. They only delisted Mediclinic, 2 years ago. So it's quite recent. So no, maybe they've done a lot of work to rationalize the portfolio. Some of the shares also can't really be listed. Take Total Energies, so you know, the French holding company is listed, but the South African Total operations themselves is a private company, so you won't see that listed anytime soon. So let's see, we might get some more news. I think it's this week, is it not tomorrow that they're coming out with results? And they might give some more information, but I'd be surprised if there's some big corporate action happening at Remgro anytime soon.
All right. I'm going to give Roy Capitec, and I'm going to give you Reinet, JP. Do you think Capitec can continue to outperform its peers, or is the share overpriced at 3,000? I was talking to the CEO of Old Mutual today, and of course they're launching OM Bank in the fourth quarter of this year, and he said that their biggest competitor will be Capitec. Roy, Capitec, do you think that it can continue to outperform, and maybe if it will get some competition from OM Bank?
Banking is difficult. I'll start from there. And Old Mutual Bank, just remember, when Discovery started Discovery Bank, that was 8-9 years ago. Maybe it could even be 10 years. They have sunk capital into that business, and it's only just started making money, or actually catching traction now. So you needed a big brother who's willing to carry all those losses and investment costs in IT for a very long time. And you need a niche where you can live in, which is what Discovery has found. Capitec, on the other hand, as well, it's taken years for them to get to where they are. They've designed themselves as a platform, so they're not Capital Bank, they're Capitec Financial Services. So they're a platform of various services, and they have a very captive market who they continually offer new products. And their big thing right now is business banking. Remember, they did the lending, they've done, then this Capitec Connect and everything. So I think you'd be a foolish investor who bets against them. I think platform businesses such as these tend to grow and tend to be rated at relatively high multiples, and their returns are reasonably attractive. They've shown they understand their customer, that they will continuously invest to fulfill the customer needs, and will generate returns from that. I think they haven't gone wrong. I don't see why they should go wrong. And this should continue. Like I said, I think you'd be foolish to bet against them purely because of valuation. They have proven they're a strong growth company, and they do generate a return. So I still like Capitec. I still think there's a lot more that can come from them.
Another stock that you like is Reinet, but we'll come back to you on that. JP, I won't be asking you about Reinet because we have run out of time. I'm scrapping a lot of questions that I was going to direct to you today. Let's get to your stock pick, JP.
So Roy referred to a platform company. I'm choosing a financial platform company called Adyen. It's a payments provider that's listed in the Netherlands. It's growing very strongly, very high profitability. And they used to just sit in the middle to facilitate payments, whether you want to pay with your credit card or your debit card or EFT. They made sure that from the merchant perspective, they could accept that payment, and that it would happen relatively frictionlessly, and that there would be no fraud, which is a very important part of what they do. So they are winning market share all around the world, from the US, Europe, Middle East, Asia. 1.2 trillion euros of payments went through their platform in the past year. They take 0.15% of the value of the transactions as their revenue, as their fee to facilitate the transactions. And if you're dealing with more than €1 trillion, that's a lot of money, even if you take only 0.15%. So still growing, still taking market share, very good e-commerce platform in the payment space. Adyen is my stock pick tonight.
All right. Roy, you did say that your pick today is Reinet, and maybe just incorporate this question in there. your view on it, the pension holding, and what you think Mr. Rupert will do with the cash from the BAT sale.
So Reinet it's a specialized holding, it's a holding company, it's an investment fund. They tend to hold the investments in any one of three buckets. So listed investments, funds, then cash and liquid assets. But up until a few months ago, it was basically BAT, and Pension Corp. Pension Corp is a business that basically buys pension liabilities from companies and manages them, and manages an exchange of cash flows. The reason why I'm picking this one is that during times of uncertainty such as this, you want to pick businesses where you have a strong cash underpin, conservative management, and well, the potential of something good happening.
Yeah.
And that's why I think your listener is asking, what happens with this cash? I think you generally have made money following the Ruperts. They tend to be conservative investors. Getting rid of BAT must mean that they're either going to pay it out, which would be a very solid dividend, or they would invest in Pension Corp, which is a fantastic business, or take it into something else that would be equivalent to what Pension Corp is. So I think there's a valuation underpin here. I think you have conservative management. There's a discount to the value of the underlying stocks, and the track record of these investors has actually been solid over time. So during difficult times such as these, this is a reasonable place for a rational investor to hide in.
All right. Well, thank you so much for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Pierre Verster from Protea Capital Management and Roy Mutooni from Sanlam Investments. Up next, The Close. Stay watching.